thank you, Bruce. As you can see on your agenda, there's a variety of different topics that are designed to help you plan for the next couple years. And my part in the overall planning is to help you give some consideration to some market factors that you might want to put into your planning schemes for the next couple years. So in other words, there's all kinds of different things that are going to be brought to you today. The thing that I'm going to bring to you is a market perspective, and the things that I'm going to talk to you about are things that I think are going to impact the future of the market. So I'm not going to be doing necessarily any forecasting, but I'm going to talk about the things that will drive the market in the next coming years. So I'm going to talk a little bit about market outlook, and then I'm going to talk a little bit about competition on the prairies, structural issues and competition. Now, I have, frankly, no idea why I got invited here to be giving sort of a market outlook, because back last year, roughly at this time, I forecast 2014 prices, Texas steers at 132. The actual is probably going to be more like 153. So that's my record of forecasting. I wasn't the only one, though, to do a bad job. This is January 6th, Cattle Buyers Weekly, analyst forecasts for the year. There's me. I forecast that 132-ish, 132 this guy, 134, 131 to 136. You can see what I'm getting at. This year was an incredible year, and if somebody tells you that they knew this was coming, I don't believe them, and I don't think you should either. What happened? Why did I and so many go so wrong? Well, one of the reasons was cow slaughter collapsed far beyond anything that anybody saw coming. Cows kill was down 18% this year. I didn't have it down 18%. I had it down like 7 or 8. Another thing that happened that we should have seen coming, but I didn't, was a real collapse of heifer slaughter as well. I had it down, of course, but certainly not down to the 7 or 8% that it is this year. So that's two big reasons, was our lack of understanding of the U.S. industry's tendency towards expansion this year. We thought it was going to start expanding, but we didn't think they were going to start expanding this much. And the other thing that happened, really, when it's all said and done, it's one thing to look at these concrete things like reduction in female slaughter, but something else happened this year called market psychology. The psychology of the market resulted in a pricing explosion, because when you stop and you think about what happened this year, it began right during Christmas week with about a $4 increase, and then the New Year's week another 3 or 4. So we started off the year at about 130, and we finished the first 2 weeks at about 138 last year. And really, you stop to think about it, how could 4 packers in the United States let this market get away on them? I've been telling the folks at Medicine Hat and Lethbridge that I'm kind of going through a phase where I like to look at Google Earth and look at packing plants on Google Earth. I want to show you some packing plants of the big 4. Like this is Cargill's Dodge City plant. And this one here is Tyson's Lexington, Nebraska plant. You can see where the cattle come in, slaughters here, and then the beef comes out there. And this is National Beef's Liberal, Kansas plant. And this is JBS's plant in Cactus in the Texas Panhandle. So again, I'm showing you 4 companies really control 80+%. How in the world could they let it get away from them? Tyson's got that kind of numbers every day. JBS, 27,000 kill a day, and so on. 80% or more capacity. Cattle feeder down there told me, he said, you know, there are thousands of us, and we let it get away on us all the time. But there's only 4 of them. How did they let it get away on them? There were packer buyers hanging outside feedlots overnight with the opportunity to put a bid in. Some just say, whatever the top of the market is, I'll give you $1.50 more. So it's one thing to talk about reduction in kills and those kinds of concrete things, but it's another thing to talk about market psychology. And that's another factor that came into play in 2014. So getting back to the outlook and supply and so on, If we had to stop the presentation here, this would be the place to do it, really, because what this whole market boils down to, whether it's 2014 to 2017, what it boils down to is the cow herd in the United States. And the cow herd is at levels that we haven't seen since the late 50s, early 60s. Ultimately, it doesn't get any more complicated than the cow herd. And when we think about expansion or contraction of the herd, I've wondered over the last few years why we haven't seen more expansion. This is the estimated returns of cow-calf producers according to the U.S. Livestock Marketing Information Center. And back here, I was wondering, sure they had some bad years during that explosion of grain prices, but generally this has been a fairly profitable industry in the United States. Why haven't they expanded, I thought. Now this year, estimated profits are up there. Estimated profits next year are also up there. So you got to start to think, when is this industry going to start to expand, at least in the United States? This is a graph produced by CanFax of estimated Alberta cow-calf profitability. And Alberta cow-calf profitability has not been, at least again, these things are all, you know as well as I do that talking in general terms about profitability at cow-calf in particular is a dangerous issue. But nevertheless, generally speaking, I'd say that clearly the U.S. has been more profitable than the Canadian cow-calf sector, largely because of the appreciation of the dollar. In other words, they enjoyed price increases while you did not because of the appreciation of the dollar. Nevertheless, the question remains, what about expansion on the prairies? So I constantly asking why, especially in the United States, haven't we seen expansion? I guess in some respects you could look at the concept of hard things like drought in the United States. Areas where there weren't drought simply didn't have room to expand. You could look at things that aren't so concrete like demographics in Canada and the United States, the age of the ranching sector. Those kinds of things that come to ask why we haven't seen expansion, especially again in the United States. And then if we think about why no expansion, then you think, when will this industry expand? Because again, especially in the United States, we've seen profitability. Well, from a market analyst perspective, I can look at things from a statistical perspective, and I can look at the U.S. cow herd, I can look at the retained heifers for breeding, then I can subtract off the cow kill, and I can get some indication of whether or not we're going to be expanding next year. And I think in the United States, based on what I just told you, we'll get a really, really modest expansion of the cow herd announced in January 2015. In other words, USDA will announce the inventory report for January 1, probably in February, and I expect when the USDA makes that announcement that it will show a modest increase in the US cow herd. When I say modest, I mean something like 200,000 head on a herd of about 30 million. So very, very tentative expansion in the United States. And after that, again, based on statistics, I would expect that by the time 2016 rolls around, you'll probably see a modest expansion of 2 or 3%. So in other words, I think the big ocean liner of the cow herd is starting to turn towards expansion for the first time in about 16 or 17 years. In Canada, I don't think we're going to see expansion when the Statistics Canada announces the inventory report early in next year. I don't think we'll see an expansion based on crude statistics that I just told you, last year's inventory, less cow kill, blah, blah, blah. I don't think we'll see that. And I would be surprised if we saw expansion even the following year because of things that I can't really put my hand on, such as demographics, such as the opportunity costs of retaining those extraordinarily valuable heifers. So I'm thinking that the Canadian herd probably is going to stay in a modest downsizing, at least for another year or two, for what that's worth. Then when you start to talk about forecasting kills, we have to look at something. One of the things I look at is the inventory in January relative to the fed slaughter. And there's a really, really good relationship between the inventories and the slaughter. Maybe that shouldn't be surprising. Now, last year it wasn't such a good guide because the concept, again, of female retention doesn't factor into this. But nevertheless, on a general sense, it's a good guide. The inventory is a good guide to the kill. There's just no good relationship, though, between the cow inventory and the cow kill. So there's nothing I can do statistically to help me forecast the cow kill, at least in recent years. Nevertheless, we go forward trying to get some indication of kill. And so I expect that in 2015, the kill is going to be less than it was in 2014. And I think that because I think, again, we'll kill fewer cows, maybe not 18% fewer cows like we did this year, but we'll probably kill fewer cows because, again, I think this U.S. herd is going to expand. And I think we'll kill fewer heifers for the same reason. So if you thought 2014 was good from a slaughter perspective, then I think you'll think 2015 is going to be equally good or better. And it won't be until the larger cow herd kicks in 2016 that we'll start to see more slaughter in 2016 and 2017. But again, it's a big ocean liner, and it takes time. It's not like chickens or even hogs. So again, relatively speaking, from your planning perspective, you know, we're going to see increased kills in the coming years, but relative to the past, not that much. So again, factor that in. Now, supply is only one part of the equation. In terms of getting to a price, demand is the other side of the equation in getting to a price. So a lot of you folks in the cow-calf sector in particular show or discuss or express angst about retail prices not being very, very reflective of what's going on in the cow sector or the cattle sector. But from a statistical perspective, they're very, very, very closely tied. What goes on in the cow sector and the cattle sector is closely tied to beef prices at the meat case. This is a graph that shows the Statistics Canada Consumer Price Index for beef. You know, you hear it announced every month, the CPI. And this is the Stats Canada Raw Product Index for cattle. And there's a very, very close relationship on a quarterly basis between the two. In other words, as cattle goes, so goes beef, eventually. Okay? And I think that's worth mentioning because this shows you the Consumer Price Index for beef year over year changes on a quarterly basis. So this is the consumer price for beef, and this is the cattle price. So what I'm trying to convey to you is that cattle prices have gone up much more than retail prices, and nobody is feeling sorry for Loblaw or Sobe or Co-op. But my point is that their margins have been squeezed, and they're not going to tolerate squeezed margins. They're going to continue to increase the price of beef. Okay? And that's important relative to demand, consumer demand. And again, just relatively speaking, the consumer price of beef has been skyrocketing relative to the consumer price of food and the consumer price of all other items. So it's been going up rapidly, but it's still likely to go up in 2015. So I've been showing this graph for about 20 years or so. This graph is Canadian beef demand. It shows our consumption of beef on a yearly basis, and it shows the consumer price index of beef. And that gives us an indication of demand. In other words, in 2009, let's say, we ate about 28.5 kilograms of beef at a deflated consumer price index of about 104 or something like that. So that the graph tells us a couple things. Number one, the higher the price, the less we eat. The lower the price, the more we eat. That's kind of what you would expect. That's kind of common sense. The other thing that the graph tells us is that Canadian beef demand has been relatively stable over time. By that I mean we haven't been increasing our demand, we haven't been eating more at higher prices, or we haven't been eating less at lower prices. Basically, Canadian demand has been stable. Prices go up, we eat less. Prices go down, we eat more. Logical. Somebody else pointed out something to me too. In recent years, somebody told me yesterday, looks like really we're willing to eat about 28 kilos regardless of the price. It's kind of an interesting phenomenon in recent years. That's called inelasticity. We're willing to eat beef, seems like regardless of the price, we want a certain amount. And that's positive too, especially in 2014. Despite those high prices, Canadians really did step up to the meat case, which is positive. And other things that we can't really put our hand on in a concrete way is changing attitudes about meat and beef. Because after 50 years of red meat or animal fats being tied to heart issues, all of a sudden we're finding massive studies coming up saying, oh, we goofed. Turns out it wasn't so bad after all. As John and I were talking, doesn't mean we're going to, you have to force feed people, but the point is that it's not something now we're realizing that should be avoided. I think that's the message, and that's positive news as well. All of these things are positive. Another thing that's positive is the U.S. export engine has been chugging along quite well, which is very supportive as well, and I'll tell you why in a minute. So, supplies, down, demand, stable, and export demand very strong. So that gets us to a price. The other thing about price, again, relates to supply really, and demand. And so in the 90s, what you have here is the US supply, and forgive me if you're wondering why I'm not getting to Canada, I will, but to talk about price, we have to start in the United States, okay? So back in the 90s, there's a pretty good relationship here. So in 98, there was about 26 billion pounds of beef in the United States. That's production plus imports less exports. And they had a price in the United States that year of about 64. So you can see how this graph works. Again, lower the supply, the higher the price. The higher the supply, the lower the price. Just like you would expect. But something interesting happened over the 2000s. We got more and more production, yet prices were increasing. Interesting. Such that today we've got really a whole new plateau, so to speak, of pricing compared to the 90s. So back in the 90s, if we would have been producing, say in 2010, this amount of production, we would have had a much lower price. So the question I think that we need to, or we might ask, is that number one, I told you that domestic demand, Canadian domestic demand, but Canadian domestic demand is exactly the same as US domestic demand. In other words, that US graph would look exactly the same. They tend to eat more beef than we do, but the overall shape of that curve is the same. So their demand is stable, our demand is stable. How can you have more production and higher prices, yet stable demand? Well, the answer is, I told you before, exports. Exports have been a key driver of higher prices for the North American beef industry. Okay, so exports is one of those concepts that is tough to get our heads around sometimes, but it's important. It's been a very important factor in the industry. Now, you folks may not have enjoyed all of those higher prices in the past because you had the Canadian dollar appreciating, and so that appreciation of the dollar took away a lot of that fun, so to speak, that some of these guys were having in the United States. So in terms of forecasting, if we got production, domestic supplies in the United States of about there in 2014, and that was the price in 2014, if you buy into what I'm saying in terms of lower supplies in 2015, then it's hard to make an argument for prices in 2015 not to be similar to anyway, or even higher than prices in 2014. Somewhere in 2015, we're going to see price somewhere in that range. Now, you may think I'm copping out and not giving a price, but you saw how good I did last year. But my point is, in terms of if you want to make arguments, if you want to make a case, I find it challenging to make a case towards lower prices in 2015 if we've got lower kills. Okay? So my forecast is for higher prices in 2015. But you know, there's wild cards out there. You know, I feel reasonably confident on the supply side, but I don't know really if Canadian consumers or US consumers are going to continue to step up to the meat case. And if they don't, if they back away, that'll cause downward pressure. The appreciation of the US dollar, that could pressure US exports lower. So there's some wild cards on the demand side. Because again, the appreciation of the US dollar is not going to help exports. Now, I'm going to kind of go off into a side bit here, because again, lots of times I hear producers, particularly cow-calf producers, talk about the fact that the Canadian industry doesn't do a good job of exporting. Cow-calf producers talk that way, certainly. Consultants talk that way, university professors, you know, people talk. Canadians need to do a better job of exporting, and they have all the answers in terms of what needs to be done. And certainly one of the things they say needs to be done is we got to go a lot more to China, they say, you know, because there's more rich people in China than there are Canadians, I've heard that said. And we're just not finding the new markets out there, the markets that are just there waiting to be plucked, they say, like, you know, like the lost city of Atlantis is waiting for us to export beef to them, they would say. And they say, you know, we do such a poor job in branding Canada. We need to brand Canada, of course, because that's going to help us export around the world, because we've got such a pure image and it's going to do wonders. But I don't think it really matters about those kinds of things. I don't think that there's any lost, untapped markets. I don't think that China is some kind of jewel that we're just totally forgetting about, because really, product always flows to the highest price market over time. But on any given day, any given week, any given hour, there's decisions that are being made by packers and traders around the world. Sometimes it's given consideration to whether or not the product that they're marketing is a commodity or whether they're trying to add some value to it. That's a constant thing that's going on. They're going to think about things, whether this is a strategic decision about penetrating a market or whether they're just going to take an opportunity of a higher price and grab it. That's a decision that's going on an hourly basis by packers. They're going to have to think about whether or not they're going to grab margin today or this week, or whether they're going to grab share, market share. In other words, the expend margin in order to get some share. These are things that are going on. They're thinking about whether or not this is a new customer that they want to grab at lower price levels, or whether or not it's an established customer. I guess my point is, and some people have said that I'm not a creative person, but I think I'm creative. This is a puzzle, and I think it's a packers put together the puzzle every single day, every single hour about where product goes. And so these folks that have got these brilliant ideas really don't know what's going on constantly. It's like as if they're so dumb they just don't realize that all these opportunities that they're missing. You know, Cargill got about, what, 40% of the Canadian market. I think they know a thing or two about trading. They've got offices around the world. They market product, all different kinds of product around the world. I bet they've forgotten more about export marketing than most of the university professors could even conceptualize. And if anybody knows more about marketing beef around the world, chances are it's JBS. So I'm not too worried about our ability to export product. And the fact that we do send 75–80% of our exports to the United States, well, chances are that's because that's the best place for it in terms of pricing. I always have a hard time knowing what's the problem with sending 75% of your production to the highest price market in the world. That happens to be right across the border. Anyway, so I'm going to try and go back now to the after my little rant, and I'll go back to say, demand summary, there are some things to worry about in terms of whether or not consumers continue to stay up to the meat case like we have in 2014. It has been positive, but prices are going to continue to rise, and we've got to have that in mind. And also, US dollar is something to worry about in terms of export markets. So, feeder cattle. Again, I'm trying to give you arguments. Oklahoma feeders, I mean, use Oklahoma as a base. It's one that's often quoted. You can see the price performance over the years and what happened this year to Oklahoma 7 to 8 weights. Why? Well, the calf crop is down. So in terms of making an argument about where pricing could go, here's one, supplies are down. 2, cattle feeders have been profitable in 2014, finally. Although the Livestock Market Information Center says that next year might not be so profitable. But again, I'm going to go back a little bit off track again and talk about why have we had such challenges at the cattle feeding sector in these years. Now those are cash margins, and I'm sure hedged margins are nowhere near that bad, but it does give you some indication of what has been happening in the United States feedlot sector. And why? Well, in terms of their feedlot sector, our feedlot sector, grain prices, of course. Here in Canada, we've also had to deal with a higher dollar, packers changing, country of origin labeling. A bunch of things have caused stress to your sector as well as to the cattle feeding sector. But the thing that I want to point out in particular, the thing that caused such a sea change in this industry is corn pricing starting in 2007 with the U.S. mandated use of ethanol expanding in 2007. So the U.S. mandated the use of ethanol at a greater level, and not surprisingly, corn prices rose dramatically to the point where ethanol consumes 40% of the U.S. corn crop, and in recent years, it even consumed more of the corn crop than livestock feed. So what you've got is not only forced usage of ethanol, but subsidized use of ethanol and subsidized capital of ethanol in the United States as well as in Canada. So the US made your life miserable, but Canadian governments and Alberta governments made it even worse, because the work we did showed that the US caused grain prices to go up dramatically, but then Canadian policies also caused it to go on top of that. So your government in Alberta, strangest thing in the world to think of Alberta, oil and cattle, mandating ethanol. You should ask your MLAs about that. See if it makes any sense to them why in the world Alberta supports ethanol production. Because again, if ethanol beat livestock to feed because of market forces, well, so be it. But ethanol didn't beat livestock to feed because of market forces. It beat livestock because of government support. So again, I'll go back to my train then. In terms of the arguments for feeder, notwithstanding my recent rant there, corn prices, of course, have gone down dramatically because of massive increases in production in 2014, excellent yields. So in terms of the feeder cattle argument, supplies are down, cattle feeders were profitable and have been profitable recently, feed costs are down. So when you're making an argument, I don't know if you can make an argument for lower feeder cattle prices, but it's difficult. So the counter argument that would say feeder prices are going to go lower in 2015 would be if the fed cattle market collapses because of demand problems. Okay? So getting to the prairies, how do we get to the prairies? Well, US price adjusted by the exchange rate, and then the spread, or the basis. Some people, the basis can be like Southern Alberta less the Chicago futures, or the spread could be like Southern Alberta less Nebraska. I like to think of the spread being a geographic and the basis being against the futures, but the terms are often used interchangeably. But first, to get it to Canada, we have to think of what is the exchange rate going to be in 2015. And I certainly, as you can see, do not a great job forecasting cattle prices. I certainly don't touch forecasting the exchange rate. But my view and experience is that your opinion on where the exchange rate is going is just as good as these. Because really, when it's all said and done, I've never really seen very strong forecasting of the exchange rate by anybody. Now, one that I do follow is this woman at Scotiabank. If the exchange rate matters to you on a regular basis, you can get an email from her every morning in terms of what her thoughts are and what's happening and why on the exchange rate. I have found her to be very, very good. And again, she's got a daily newsletter that's great. And she's very, very practical. But I don't know where the exchange rate's going to go. Everybody, all these folks seem to be saying, you know, obviously this thing, nobody's sticking their neck out. Everybody's saying something like, again, that 90-ish or 89 kind of thing. So in terms of the spread, so you got US, then you've got the exchange rate, whatever you think it is, because again, I think your forecasting abilities are just as good as theirs. And then you got the spread. What is the spread? The spread is really the most important component of the spread is transport costs, because no logical buyer, no rational buyer, packer buyer, is going to pay a cattle feeder any more than what he can get down south. So a rational packer buyer is going to pay the US price less the cost of transport. So anyway, the spread is made primarily of transport. Now, if packers are going to pay more than the cost of transport, that means probably that supplies are tight and they don't want things to get away. Or if they pay less than the cost of transport, that means they don't care. Supplies are ample and they don't necessarily care. Because the spread over the long term between Alberta and Texas, let's say, is probably, you could say, on average, -8 over the last few years. That's the black line. The blue line with the squares is 2013 spread. And the red line is this year. So you can see in the spring or late winter, packers really didn't care about keeping cattle in the prairies. In the summertime, things might have tightened up. But in some respects, though, cash is really becoming less and less meaningful anyway, in terms of as a marker of where the industry is, because some weeks Canfax doesn't even have enough cash to report because so much is going formula and contract. So the things that matter with regard to local, the spread, is competition. Competition between packers for your cattle, competition between cattle feeders for your cattle. And a lot of that is based on the structure of the industry. And the structure of the industry is there's thousands of you, I'm assuming most of you are cow-calf producers, thousands of you in Canada and North America, ranging from maybe auto workers in southern Ontario who own some cows to full-time commercial ranching operations, the whole gamut. A whole range of professionalism in the industry. Cattle feeding is a little more concentrated, but there's still thousands of cattle feeders. Now, mind you, in Alberta, 10 operations probably represent 30 or more % of the marketings. 20 operations represent probably 40-ish. So it's a little more concentrated. Then you've got the packing sector here, which is, of course, concentrated, and then retail and food service. And I don't think that's as concentrated as you think. I think there's a fair amount of competition there between Loblaw, Sobeys, Co-op, Walmart, Costco. I think there's more competition than sometimes we appreciate. But nevertheless, that's the structure of your industry. So let's talk about competition. And again, I forget if I've told you, as you can see, I'm again going through the phase of loving to Google Earth and looking at these pictures, because here's JBS plant and then what they call the Five Rivers Feedlot across the road. So that's one of your competitors at the packing level. Then there's the High River plant, Cargill. Now, here's a competitor as well. This is the JBS plant in Hiram, Utah. Now, it's probably not as much a competitor as it was even a year ago, because there's more coordination of the buy between Hiram and Brooks now, which is logical. But nevertheless, it's part of the market. JBS's Hiram has always been taking about 2,000 or more head a week out of Alberta. Then the really important player in the Alberta market is the Pasco plant. Tyson's Pasco plant has been a serious presence for 30 or more years, taking fewer cattle out than it used to, but nevertheless still probably 3,000 or more a week. And then Agri-Beef in Yakima, again a regular presence, whether on the feeders or on the fed cattle. So those are your packer competitors, and we're supposed to have another one coming in 2015 at Balzac. So, a little word about XL, which went out of business, of course, in late 2012. Some people say, well, that's no big deal because, JBS bought it, the plant's still going. But like I told you, JBS was already a presence in the Alberta cattle industry through Hiram, 3,000 a week. So really what happened when we lost XL was we lost a competitor. We lost a Canadian competitor. And that's a serious loss, in my opinion. So I don't view it as just a plant that's still running. I view it as a lost competitor. And really when you stop and you think about, if you ever took the chance to read the report on what happened there was a big report done by some people that are pretty serious and respectable people about what happened, why it went down. They blamed the company, of course, and the company that did take the blame. People say they didn't, but I think they did. They publicly took the blame. But the report also blamed the CFIA. And if you read the report, they give equal blame, in my view, to the CFIA and XL. But the private sector is cold and cruel. And so what happened in the private sector was the company went out of business. The other sector is not so cold and cruel. Did anybody even change jobs at the CFIA because of this? Anybody, of course, nobody would lose a job, of course, but nothing happened there, despite the fact that this report basically saying that they were equally culpable in what happened there. So again, another side rant for me. Going back to the competition on the prairies, if I had to pick one thing that I was most interested in the last year and a half, I would say I would be most interested in this: the flood of feeder cattle leaving the prairies, particularly the eastern prairies. When I say east, I shouldn't say east, I should say from Saskatchewan east, into Nebraska. I find nothing more interesting than that. And the reason I find it interesting is because, number one, they're ultimately going to Lexington, Tyson's Lexington plant. Tyson has said, we are willing to take B cattle under country of origin labeling. I don't know how much you all know about country of origin labeling. You probably know enough to know that Tyson saying they're taking B cattle is a big deal. So those cattle feeders down in Nebraska have no worries about marketing those B cattle. They have no worries about on a risk management front. Tyson has said, we're taking them, and these so from a pull side, it's a strong pull because the supplies are so tight in the United States. And from a sophisticated logistical perspective, the eastern prairies are being cow-calf producers are being well served by strong logistical support in getting cattle south. So these hundreds of thousands of head moving south are important to you as cow-calf operators in terms of being supportive to your bases. And as much as cattle feeders here in Alberta might hate this phenomena, it likely also supports the fed cattle basis as well. So this is the thing that like I say, I find this most interesting, the amount of cattle that are going into Nebraska from the prairies. But that's competition. The other thing that's interesting is that this is a graph that shows the price spread in Canadian dollars between Alberta barley and Omaha corn. And it shows that Alberta is losing over time its pricing advantage to Nebraska to the point where barley has almost completely lost its pricing advantage, which is also going to draw feeder cattle south. So in terms of, again, the competition, those are the people that are competing for the cattle. The other side of the competitive balance on the prairies is the fact that supplies are down. So there's competition, maybe not as much as we would like on the packer side, but frankly, I don't know where you'd find room for any more packers now anyway, any more packing capacity. I mean, Harmony has got its work cut out for it. I'm sure it knows that. So you've got, I would call it a competitive environment on the packer side. You've got more competition for feeder cattle going south than ever before, and you've got declining supplies. So in terms of that spread, it's leading to the conclusion that we probably are going to lose some feedlot capacity in Alberta. This graph shows you CanFax's estimate of feeding capacity, annual feeding capacity over time. And you can see we've lost feeding capacity. But given declining supplies, given the volumes going south, logic or the argument would be, we probably are going to lose some more feedlot capacity. And with regard to packing capacity, same thing. We lost the Calgary plant a while ago. We lost Moose Jaw, largely, I think, because of declining supplies. More recently, we lost the Plainview, Texas plant, Cargill, because of declining supplies. Also, this year, we lost the National Beef Plant in Brawley, California, because of declining supplies. And you might say, well, big deal. Calgary, Moose Jaw, we knew that was coming or whatever. And certainly Plainview, Texas and Brawley, California are a long way away from you. But I think you should consider that there's going to probably be more closures, and those closures are probably going to be closer to home. Now, whether they're in Alberta or whether they're in the northern tier, again, I'm not saying there's going to be, but I am saying there's an argument. And that's all I'm trying to do here is place arguments before you. And there's a strong argument that A, we're going to lose capacity, and B, it's going to be closer to home. Adding on top of those factors, we've got those serious issues with regard to temporary foreign workers, particularly in Alberta, of course. But all packers across the prairies, whether they're hogs or cattle, are faced with changes to this program that are going to cause them even more grief. So in the future, more contraction, whether at the cattle feeding or at the packer level. And who? Well, again, Tyson Pasco plant has to be given some thought. I mean, it's one of their smaller plants. And again, I'm not saying it will be, but it is something that is a worry for folks in Alberta because it's so important, and it has been. The JBS plant, again, I'm not saying it's going to, but I think it's something that has to be considered given the problems with temporary foreign worker program, given supplies, given the fact that they've got a fantastic plant in Hiram, Utah. And again, I'm not saying that these things are going to happen. My record at forecasting corporate strategy is iffy. I mean, a few years ago, I suggested that the Hiram plant could be closed, and then a month later, they announced about a $40 million expansion. So I certainly have no skill at forecasting corporate strategy, but nevertheless, the fact that they've expanded that plant tells me that do they really need Brooks? And again, likely that some feedlot capacity is going to be under downward pressure as well. Because really, when it's all said and done, you folks are in control of the single most prized asset that the industry has, and you are going to be in control of it for at least another 2-3 years. Everybody wants what you have. You're in the driver's seat right now. You weren't always, and you won't always be, but right now, you hold leverage. And so what? Well, the so what would be you're going to have probably more opportunities than ever before in terms of marketing your cattle. More people are going to want to tie up their supplies than ever before, and they're going to be looking for ways to make arrangements to do so. So you've got, I think, more of a smorgasbord than ever before in terms of how you do your business, at least from a marketing perspective. So that's it, Bruce. And there's my email. And I used all the creativity I could muster in thinking up my new company name, Kevin Greer Market Analysis and Consulting. So if you ever want to send me an email, please feel free. There's my email. And if you ever want to take a look at Canadian Cattle Buyer, I can send you one. So the question related to the fact that the cattle, fed cattle in particular, were you focusing mainly on fed? Yeah. Yeah. The fed cattle pricing on the cash market has gotten so thin. Like I mentioned, Canfax some weeks can't even report a cash price. So how do you make decisions? How do you market into that? You know, it's something that the hog industry went through a while ago, and you're going to get it more and more because of the things that I was talking about in terms of the desire for people to get their supplies locked up. That cash market is going to get less and less. Now, the counter argument to that is that the cash market was so much stronger than the contracts last year. There's probably going to be a lot of folks that are going to want to take more chance on the cash market. Now, counter argument to that is that there's such risk. I don't know who would really want to take a risk on the cash market. So, in fairness to you, you're in the midst of a massive change right now, and I guess what I'm trying to say is enjoy it because you're on the right side of it. No, you are. You've got more leverage now to do what you want with your cattle than you ever had before. So yes, you're absolutely right. There's less guidance on the cash market. There's less meaning on the cash market because so little has been going into that cash market now. So you're absolutely right. But if you want to look at it the other way, you have leverage. You now have more opportunities than ever before to market cattle in a way that you want to. Because again, when you see cattle, part of the reason why Nielsen's fed so many cattle when they were owning the plant was because they had no idea really who owned the cattle. You could drive and see millions of cattle, but who owned them? Are they going south? Nobody knew. So that's why they decided to feed a lot more cattle, and it got people pretty annoyed because they fed 150,000 head at any one time. But I think if they knew who owned the cattle, they probably wouldn't have fed any cattle. So I sympathize with your point of view, but I'd like you to flip it around and look at it as you're in the middle of massive change with regard to marketing, but you're in the driver's seat. It'd be bad news if you were the other side, massive change in terms of marketing in a surplus situation. I wouldn't want to be you. The U.S. implemented country of origin labeling on red meats in 2008. And that said that every piece of fresh meat down there at retail had to be labeled as to born and raised wherever it was. In Canada, born in Canada, raised in the United States, and slaughtered in the United States, that had to be on the label. Now, you mentioned, wasting time with lawyers and all this kind of stuff. I believe that money that we spent fighting country of origin labeling was money well spent. And we didn't ask for this fight, okay? Number one, this was brought on by the National Farmers Union, RCAF. This was brought on by cowboys in the United States. Cattle feeders didn't want it. Packers didn't want it. Most of the hog producers in the United States didn't want it. Their associations didn't want it. So with respect, you're right, sure, but this is not a fight that we picked. It's a fight that we had to fight. And it's the right fight because it does cost us millions of dollars, and it's cost people their livelihood. I think about Manitoba weaner and feeder producers who were driven out of business in 2008, 2009 because of this, losing markets. The costs of this program are real. Packers have added costs of labeling Canadian product. They have added risks of selling it because fewer people want to use it. So country of origin, I'm going to get wound up because I just can't stand country of origin labeling. And I've been involved in fighting it, and it should be fought. So, and we've been winning all the time at the WTO. We've been winning because we've been right, because it discriminates against Canadian cattle. We haven't said anything about injury, it's discrimination. Our animals are being treated differently than US animals, and that's not right under international trade agreements that the United States signed. So we keep on winning, and we will keep on winning. But the Obama administration, because of the way they will keep on fighting us. Now, the good news is, for a whole bunch of different reasons, Republicans now control the Senate. So there's more opportunity to get this thing settled administratively before we go to the retaliatory phase. Because we will win, we'll keep on winning, and then we will retaliate. And so what? That means everybody loses if you ask me. So I think that now that we have Republicans now in control of the Senate, it won't go that far. If you had Democrats in control of the Senate, it would go that far. So Somebody said, well, gee, once we lose country of origin labeling, there's going to be more cattle going south, and you could risk capacity here, you know. And I said, you know what, there's something to that, but I will never, ever say anything positive about country of origin labeling. So as much as you're right, what are you going to do except fight it? I always say that you know, nobody knows what these words sustainability means. Everybody's got different. And somebody asked me if I had to say about sustainability, and I would say sustainability, cow-calf producers should say yes. Sustainability means doing what you've always been doing, only bragging about it. Because this industry has been sustainable, has acted responsibly on all the things that you said, always has, always will, not because they're warm and cuddly people, simply because it makes sense to do so. So my view on sustainability is just keep up doing what you're doing, but only just brag about it, you know. But so I don't know I don't know much about that kind of stuff, except I'm annoyed by it. But other than being annoyed, I don't really know much about it. You know, I'm bringing you perspective as a market analyst. I know a lot of this discussion about whether it's traceability or this or that, the kind of things. They don't add any value to anything. They don't make the beef taste any better. They make it cost more, of course. But there's no value adding going on in all these kinds of things. But you know, we get around and we talk about these things enough, we convince ourselves that these things are important, and we convince the McDonald's of the world that they should worry about these kinds of things. But the vast majority of consumers, when asked honest questions like, what matters to you when you buy beef or meat? What matters to you when you buy these products? What matters is safety, taste, price, normal things. If you ask them, does animal welfare matter to you? Well, of course it matters to me. Or if you ask them, are you worried about this? Well, they'll always say, but when consumers are asked honest questions, about 95% say the basic things that you would expect. Taste, nutrition, price, those things matter. So then there's the 5% or so that have enough money to worry about or pretend they're concerned about these kind of things. Then you've got the activists, you know, the David Suzuki's or whatever, those kind of flaky people. But again, so I guess it kind of annoys me because we've managed to talk ourselves as an industry into doing these things that don't add any value. And like I say, I do extensive consumer attitudinal surveys with my mother and two sisters. They don't, you know, if I ever talked to them about any of this stuff at the dinner table, they would tell, my one sister in particular would tell me to shut up. Nobody cares, Kevin, about any of this stuff. Nobody cares about where the animal's from. Just eat it, okay? So in terms of my own surveys, Mom and my two sisters could care less. So I don't know if I answered your question, but again, you got me wound up.
Well, I guess the message then is we need to do a better job about bragging about what we actually are doing.
Yeah, because really, this industry, you know, again, not because they're wonderful, warm people, it just makes good business sense to behave in a responsible way with your animals and all these other things. And nobody adds chemicals that aren't needed anyway. You know, all these kinds of things. You know, this industry is sustainable and it's got an awful lot to brag about. You know, again, when you think about the accomplishments of this industry in terms of productivity, ability to feed the world, doing more with less, you know, compared to David Suzuki, you know, like any single one of you in a room could stand up and debate and have a far better case to make than those wackos. I think you'll see a market reaction and beneficial to you folks in the cow-calf sector. Because really what's happening in Nebraska is, again, Tyson has put out the window saying we're taking B cattle. You know, our plant is dedicated. I mean, that's what you got to do. You got to dedicate it. You got to have the logistical infrastructure there, and you've got to have the, you know, the times for the kill and all that kind of stuff, all that kind of silly stuff that country of origin labeling has forced them to do. But they've put out the window saying we're taking them, and so that's the demand side of that. But you're taking your next step. That's not going to be necessary if this thing finally ends. If this 8-year ridiculous thing ends, it's going to be wide open. And then what could happen is, like I say, you could end up having more stress on capacity up here. So you're right. So I mean, but like I say, I will never argue against you know, against getting rid of country of origin labeling. But there are ramifications, you're right. But I think it's positive for you ultimately.